So, you're looking at getting into crypto in 2025. Well, let me tell you, just throwing money at whatever coin is hot this week, that's not going to fly anymore. The whole space has matured, and that means our strategies have to mature right along with it. So, today, we're going to build out the exact playbook that separates the real pros from, well, everyone else. So, the big question, right? Is crypto in 2025 still the Wild West? And, it's easy to think that, with all the crazy stories of people getting rich overnight or losing everything. But what if I told you that underneath all that noise, the entire landscape has shifted? The rules of the game, they're just not the same anymore. And yeah, this slide right here, it nails the difference. You've got the old way on the left, all about impulse, chasing hype, that FOMO feeling. Let's be honest, it's basically gambling. And then on the right, you've got the new way, strategic, patient, driven by actual data. That is where we want to be. All right, so let's get into it. The market has seriously moved past that initial kind of chaotic Wild West phase. I mean, we're seeing huge institutions jumping in. We have access to way more sophisticated tools, and the market itself is now rewarding a solid strategy, not just blind luck. And this is a really important point, so listen up. Your goal has fundamentally changed. It's no longer just about buying some crypto so you can say you're in the game. Nope. The goal now is to invest intelligently, to actually build wealth in a smart, structured way. This is the big mindset shift we're making today, right here at the beginning. Okay, let's start building that foundation. We're going to walk through the core strategies that are like the absolute bedrock of any serious crypto portfolio. And look, these aren't some flashy get-rich-quick tricks. These are the tried and true, disciplined approaches that, well, they just plain work.
First up is a total classic, and for a very good reason, dollar cost averaging, or DCA. The real beauty of DCA is its simplicity. Instead of trying to do the impossible, which is, timing the market perfectly, you just commit to investing a set amount of money on a regular schedule. That's it. What this does is pretty brilliant. It forces you to buy more of an asset when the price is low and less when it's high, which totally smooths out all that crazy volatility over time.
And putting this into practice is incredibly easy. Seriously. You just pick an amount you're comfortable with, say $100. You set a schedule, maybe every single Friday. And then, the key part, you automate the buys on whatever exchange you're using. It's the classic set it and forget it approach. And this is exactly how you remove emotion from the equation and just consistently build your position over time. All right, our second big foundational idea is all about a major mental shift. See, when the market takes a dive, what do most people do? They panic. But a strategic investor, they see something totally different. They see a discount. They see an opportunity. So the real question is, how do you actually take advantage of that? So how do you turn these scary corrections into your biggest opportunities? Simple. You prepare. That means having some capital, like stablecoins, just sitting on the sidelines, ready to go. It means you have to fight that gut instinct to panic sell along with everyone else. Instead, you calmly start buying up more of the high-quality assets you believe in long-term, especially when fear is at its peak. And you can even get a bit of an edge by using data. There are tools for on-chain analytics, which is just a fancy way of saying we're looking at data straight from the blockchain that can help you spot when the selling pressure might be easing up. Okay, so we've got our foundation set. Now, let's start filling out our tactical toolkit. These are the specific tools and methods you're going to use to actually execute your strategy in the real world. All right, diversification. This is a huge cornerstone of any smart investment strategy, crypto or otherwise. And this little chart here gives you a really good idea of what that can look like. So you've got the biggest chunk, maybe half, in the blue chips, Bitcoin and Ethereum. That's your stability. Then you've got another chunk dedicated to growth. These could be other layer 1 blockchains, think of them like the base level highways, and layer 2s, which are like express lanes built on top to make things faster and cheaper. And finally, you've got a smaller, more calculated slice for the really speculative stuff, the things that have a shot at some massive upside. And why do we do all this? The reason is super simple. It protects you. If one part of the market, let's say DeFi, has a terrible month, your whole portfolio doesn't just go up in flames. You've got a cushion against that one sector's risk, but you're still in a position to catch the big trends happening across the entire market. Next up in the toolkit, you've got to understand your order types. A market order is basically you yelling, "Get me in now." It's fast, but in a choppy market, you might end up paying a worse price than you saw on screen. That's called slippage. A limit order, on the other hand, gives you total control. You say, I'm only buying at this specific price or lower. The order will just sit there until the market comes to you. It's the difference between being impulsive and being precise.
Okay, but what about all that cash you're keeping on the side, just waiting for a dip? Well, you shouldn't just let it sit there doing nothing. You can actually put that idle capital to work for you. I mean, there are all sorts of platforms that let you stake your assets or use things like liquid staking to earn a passive income, a yield. It's a total pro move. This way, instead of just waiting for an entry point, your money is actually growing. It's compounding your returns while you wait. It's a game changer.
All right, we're on to the final piece of the puzzle. And honestly, this might be the most important part of all, your mindset. Because you can have the best strategies, the best tools in the world, but if your psychology is all wrong, trust me, none of it is going to matter. A professional investor's mindset is all about being driven by data, not emotion. And that means you're watching two main types of signals. First, there are the macro signals. Think big picture stuff from the traditional finance world, like what the Fed is doing with interest rates or major news about things like ETFs. And second, you're watching the on-chain signals. This is the data coming directly off the blockchain. Things like how many people are actively using a network, or what are the big players, the so-called whales, doing with their money. And that brings us to the absolute #1 mistake that trips up almost every new investor: emotional FOMO, the fear of missing out. You know the feeling. You see some random coin's price going vertical and you get that itch. You jump in right near the top, and then, boom, it all comes crashing down. I'm not exaggerating when I say that this one emotional reaction has probably destroyed more wealth than anything else in this space. So what's the antidote to FOMO? It's this simple phrase right here. This is so crucial. Your #1 job as an investor isn't to get rich quick. It's to protect the money you already have. Capital preservation. A smart, defensive mindset will, over the long run, always beat a reckless strategy of just chasing every hot new thing. Okay, so let's wrap this all up. Think of this as your personal cheat sheet. You've got dollar cost averaging, which is all about consistency over trying to time the market. You've got buying the dips, which turns volatility into your friend. You've got limit orders, which give you control instead of just speed. Diversification, which is the classic, don't put all your eggs in one basket. And finally, avoiding FOMO, which really just boils down to planning your trades and then trading your plan. You get these 5 things down, and you are well on your way to mastering intelligent crypto investing. And that really brings us to the final thought here. Look, we've just laid out the entire playbook. You now have the same knowledge, the same strategies that the pros use every single day. So the only question left, the one you really have to ask yourself is, do you have the discipline to actually stick to it?